Assalamualaikum warahmatullahi wabarakatuh. We are from Group 1 and we would like to present our discussion about cash. First, let me introduce myself. My name is Nazla salsabilla and I will present it with my friends Bintang, Cantika and Fikri, Anwar, Rosyid. Before we get into the discussion, I will tell some points about a topic that we will discuss in this presentation. The first one is definition of cash, number 2 is reporting cash, number 3 is cash disclosure, and number 4 is assessment of cash. The first one is definition of cash. Cash consists of coins, currency or paper money, checks, money orders, and money on hand or on deposit in bank. In accounting, cash is the one asset that is readily convertible into any other type of asset. Shortly, cash is the company's available liquid asset. In addition, because of the large volume of cash transactions, numerous errors may occur in executing and recording them. To safeguard cash and to ensure the accuracy of the accounting record for cash effective, internal control over cash is critical. Okay, the next one is assessment of cash. Assessment of cash in the realm of accounting and finance encompasses several key concepts. Okay, the second one is assessment of cash. Assessment of cash in the realm of accounting and finance encompasses several key concepts. Firstly, there is the cash ratio, which measures a company's liquidity by comparing its cash holdings to its short-term liabilities, providing an overview of the company's ability to settle short-term debts with its cash assets. Next, there is the cash ratio formula, which evaluates the availability of cash to settle short-term liabilities by involving all payment instruments usable for transactions. Okay, another method is the discounted cash flow or DCF, which considers the present value of investment to project future cash flow. Lastly, cash possesses specific characteristics as a company asset, as it can be utilized as a high liquidity payment instrument with standard exchange practice. With an understanding of these concepts, companies can conduct comprehensive cash assessment to support informed financial decision making. Okay, the next one will presented by Bintang, Cantika.
The next one is material about reporting cash. Companies report cash in two different statements, the balance sheet and the statement of cash flows. The balance sheet reports the amount of cash available at a given point in time. The statement of cash flows shows the sources and uses of cash during a period of time. When presented in a balance sheet, cash on hand, cash in banks, and petty cash are often combined or reported simply as cash. Because it is the most liquid asset owned by the company, cash is listed first in the current assets section of the balance sheet. In some cases, they report cash together with cash equivalents. Cash restricted for a special purpose is reported separately as a current asset or as a non-current asset, depending on when the cash is expected to be used. For more details, I will explain about cash equivalents and restricted cash. The first one is cash equivalent. Many companies use the designation cash and cash equivalents in reporting cash. Cash equivalents are short-term, highly liquid investments that are both readily convertible to known amount of cash, so near their maturity that their market value is relatively insensitive to changes in interest rates. Generally, Only investment with original maturities of 3 months or less qualify under this definition. The second one is restricted cash. A company may have restricted cash that is not available for general use but rather is restricted for a special purpose. Cash restricted in use should be reported separately on the balance sheet as restricted cash. If the company expects to use the restricted cash within the next year, it reports the amount as a current asset. When this is not the case, it reports the restricted funds as a non-current asset.
Okay, the last one is cash disclosure. Disclosure means supplying information in the financial statements, including the statements themselves, the notes to the statement, and the implementary disclosure associated with the statement. It does not extend to public or private statements made by management or information provided outside the financial statement. Events 2010 cash disclosure involves revealing information about cash balance, transactions, and payments. In the banking industry, financial institutions provide disclosure to account holders, covering details such as NSF, fees for checking account, and interest calculation for deposit account. For publicly traded companies, disclosure is crucial to inform investors about both positive and negative news that may influence their decision. The Securities and Exchange Commission, or SEC, mandates disclosure of relevant financial information, operation detail, and management compensation. Reporting entities are required to disclose the nature of restitution on cash, balance, and how the statement of cash flows reconciles to the balance sheet. When the balance sheet includes more than one line item of cash equivalent, and restricted cash, there are different types of cash disclosure, including those related to investment account, tax reporting, and financial statement. For example, investment firm may provide a cash picture disclosure statement to inform clients about their cash sweep programs. That's all our presentation for today. Assalamualaikum warahmatullahi wabarakatuh.